How does a tax refund work? Have you ever wondered how a tax refund actually works? It might seem like a mystery, but it is quite straightforward once you break it down. A tax refund happens when you pay more in taxes throughout the year than you actually owe. This overpayment can come from various sources, like what your employer withholds from your paycheck or any estimated tax payments you make. It can also include refundable tax credits, which can generate refunds even if you did not pay any taxes at all. When you file your annual tax return, you are reconciling the total amount of tax you owe with what you have already paid. If your payments exceed your tax liability, the government will issue you a refund. Refundable credits, like the Earned Income Tax Credit or the Child Tax Credit, can add to your refund amount, even if you have not paid taxes during the year. To claim your refund, you need to file your tax return within 3 years of the original due date. If you miss this deadline, you will lose the chance to receive your refund. E-filing your return can speed up the process significantly. Most refunds are issued within 21 days if there are no errors or if you are not claiming any credits that requiring additional review. Once you submit your return, the Internal Revenue Service will check your personal information and payment history. If you choose direct deposit, you will receive your refund the fastest. Paper checks or amended returns can take much longer, sometimes weeks or even months. Delays can happen if there are errors on your return or if you are claiming certain credits that need a manual review. From an accounting perspective, refunds are treated as a recovery of prior expenses. When you initially pay taxes, you record it as an expense. When you receive a refund, you reverse part of that entry. This means you will debit cash and credit the original expense account. Tax filing software often includes a tax refund estimator. This tool helps you project your refund by comparing your expected tax liability with your withholdings and credits. By entering your prior year data and current income, you can see how different deductions might affect your refund. This can help you adjust your withholdings or plan your payments for the upcoming year. When considering your refund, keep in mind a few key points. The speed of your refund can depend on how you file, your bank's processing time, and the workload of the Internal Revenue Service. Large refunds or unusual credits might increase your chances of being audited. If you want to avoid overpaying in the future, you can adjust your withholdings using Form W-4. For both individuals and businesses, it is important to track refunds accurately. Tax software can automate much of this process, making it easier to keep your financial records in order. Understanding how tax refunds work can help you make informed decisions about your finances and tax planning.